Good afternoon, everybody. You're all very welcome. I'm Helen McDaid of the Enterprise Support Unit in Fáilte Ireland. First of all, can I say apologies for the change in link at the very last minute. We had the capacity for 1,000 attendees and we had about 1,200 registrations. It was grand because there's always some no-shows, but then it took a leap to 1,700. So we had to switch to the larger platform. So hopefully you're all on. I can see the amount of registration. So we'll get going. But I think the very fact there's close to 1,700 people registered for this session, it really shows just how important both the outgoing temporary work subsidy scheme and the incoming employee wage support scheme that were announced as part of the July stimulus packages are to kind of keeping the doors open in like hundreds and hundreds of tourism businesses around the country. So I'm delighted with that in mind to be able to welcome our panel from the revenue, who are the absolute experts in both of these schemes. I know they'll probably be saying, like, I know there are some details to kind of finalise, but they'll actually have the most up-to-date information that we have. So we have Gearóid Murphy with us, who was responsible for the implementation of the Temporary Work Subsidy Scheme. And Dullea is with us, and she is responsible for the new Employee Work Support Scheme. Byrne is a change manager with revenue, and Karen's going to be doing the main presentation that'll cover off a lot of the details. And then Glancy is an expert around personal taxes policy and legislation. So you're all very welcome. Thanks a million for joining us today. And just before we get into the session itself, to cover off on a few of the logistics, the session will last about 45, 50 minutes. Obviously, we'll try and get through as much information as we can in that time. Now, I'll pass you over to Karen in a few minutes, and she, as I said, she'll take you through a detailed presentation about the two schemes and then the transition from one to the other. And at this point, I'd like to say a huge thank you to all of you who submitted questions as you registered, because we were able to use those as the basis of the presentation. So a lot of the queries will be covered off in this section. Then after Karen, we'll actually go straight to the panel at that point for Q&A. So you can still submit questions as we go. Just make sure you put them in the questions box and not into the chat box. And then what we'll do is I'll pick those up then with the panel, and we'll get through as many of those as we possibly can. Now, what I will say with the amount of people that we have online and the amount of people registered, like I'm sure with the best will in the world, we're not going to get through all of the questions. But what we'll do is after the session is we'll put together an FAQ that will actually go up on the Fáilte Ireland Support Hub. So that'll cover off on a lot of the information that was gathered in the sessions, and then also we'll kind of bundle a lot of the questions that we get through the Support Hub and get answers for all of those. Now, we're also going to be recording the session, and then that'll go up in the Support Hub as well, and then we'll have a PDF of Karen's slides. So all of the information that we'll have covered today will all go up for you. So I guess just before I hand over to Karen, Gearóid, I think you just wanted to have a quick word about the Stay and Spend initiative.
Thanks to Colette, Amanda, Helen, yourself, Marion, and Rachel for organising the seminar and gives us an opportunity. Just to take a few minutes of your time very early on stages, the July stimulus package announced by the government contained a stay and spend incentive for the accommodation and food sector, and although we're still in the planning stages and the design stages of this, it's important that even at this early stage just to announce where we are and what we're hoping to do. Basically, there are two types of services that qualify for relief under this section. The first being the provision of holiday accommodation, that's hotels, guest houses, B&B, safe self-catering accommodation, caravan, camping parks, holiday camps, all of that nature would be qualifying service providers in this regard, and the property. There's a number of criteria that they need to fulfill. The property or the company needs to be registered with Fáilte Ireland. They have to be VAT registered and also have a tax clearance certificate. We'll be putting up details in the near future about how you actually register as a service provider for this. The other sector that's involved in this, of course, is also the food and drinks, excluding alcohol, will also serve in cafes, restaurants, hotels, pubs, would also qualify for relief. Now, the basic key principles are that our service providers will apply to revenue. We'll respond to that application, providing them with confirmation that they're a qualifying provider. We'll also be publishing the names of qualifying providers in a user-friendly way, so that consumers can see who's participating in the scheme. Those who are participating in the scheme from the 1st of October can provide a receipt or a statement to people of their expenditure, either in the holiday, in the accommodation, or in the food sector. The consumer can then claim a tax relief for that expenditure. It's the maximum a single person can get is €625 over the period October 2020 to the end of March 2021. So we'll give that 625 in transaction costs or expenditure, and we'll give a maximum of €125 back for a single person, and it's double that for what we call jointly assessed people. Further details will be provided in the near future. It's a major scheme in respect for the consumer perspective. We're getting plenty of contacts already from consumers asking us when they can use this. It'll be very easy for a consumer to actually participate in the scheme. It's only a matter of basically taking a photograph of the receipt that they get from the accommodation provider and sending that to us through an app that we restructured and we're currently working on. It'll be very similar to other receipts and other expenses and other credits that we provide in revenue, such as health expenses. So as it currently stands, we expect to have a few 100,000 people during the year. We'll be looking for this sort of facility, or be sending us hundreds of thousands of receipts, as we're currently getting them for other purposes and other functions and other credits. So we'd expect a lot of that. We've been working very closely with Fáilte Ireland in this regard, and we'll be working closely with other facilitators as well, just to get this up and running. So with the aim of being, at least for the end of this month, that we'll have a lot more guidance out there, a lot more information out there, and to make it as simple as possible for everybody concerned to undertake and participate in this scheme. So more than on. Thank you.
Okay,
Thank you.
Brilliant, Gearóid, thanks. And that's for travel October to April, isn't that correct?
That's right. October to the end of March. 6 months.
Or to the end of March.
Yeah.
Okay, all right, perfect. All right, look, that's great. Thanks a million. And sorry, I wasn't being rude on my phone while Gearóid was talking. I'm actually, we obviously have people who are still trying to get in, so I was just sending on emails in case you thought I was hanging out on my phone. So look at Karen, what I'll do now is I'll hand over to you to take control of the slides if you want to jump in there and start your presentation. For all of the other panelists, could I ask you now just to turn your cameras off? And then Karen, I'll pop back in whenever you're done and we can start the Q&A from there.
Perfect, Helen. Thank you very much for that. What I actually might do myself is switch this camera off just to facilitate the bandwidth here, and then I'll come back on once I finish the slides, and everybody else will be back on. So I'll just knock that off there. So again, thank you very much, Helen, and to Gearóid for that introduction. I'm going to talk you through, I know it says transitioning from TWSS to the EWSS, or what it's called. So I'm just going to give an overview, again, a brief overview of the TWSS and the eligibility criteria around it. Because obviously there are still employers that are availing of this until the 31st of August. And even then, the TWSS is not going away, and it's going to still be around for some months afterwards as we move into a reconciliation phase of it, and then obviously with the end of year review for employees. So it is important to keep reminding employers that have availed and are availing of the TWSS that it is still operational until the 31st of August, and it will be still ongoing for a couple of months after that. So again, I'll bring you through that brief overview, and I'll talk you through then some more of the operational aspects and the EWSS. We have as much information as we can provide up to today on the EWSS, and again, I'll walk you through all that. So a brief overview then, as you're all more than aware that the Emergency Measures in the Public Interest Act, as announced by the government on the 24th of March, was to provide that financial support to eligible employees where their employers were affected by the COVID-19 pandemic. And again, that was extended. The scheme has been extended to the 31st of August. The scheme itself is set out under Section 28 of that Act, and as I said, it allows for that financial support to employees. The overall aim is to maximise the staff retention and the viability of the employer's business through this crisis by kind of maintaining that employer-employee link. And with all initiatives, Revenue have taken a fair, reasonable and pragmatic approach to the implementation of this scheme. A list of employers that have participated and implemented this scheme will be published on our website at the end of the scheme. And again, that's just a fairly standard approach to any type of grant process, and it is becoming a growing international practice. But it also aids transparency between the employer and the employee that the scheme was implemented and was operated correctly or as intended by the employer. And again, as with everything, Revenue does expect that presumption of honesty from all participants, and the scheme is based on the self-assessment principles with a self-declaration from the employer regarding the negative impact of the COVID-19 pandemic on their business. And just as a reminder, the scheme, that registration or self-declaration for the scheme closed last weekend on the 31st of July, so no new registrations will be accepted for the TWSS as announced by the Minister last week. The eligibility, and again, it's important again to remind employers that are operating this scheme that the eligibility criteria is outlined. We have a full document on our website available for that full criteria and the supporting documentation that will be required. The scheme is available or was available to all employers across all sectors, excluding those in the public and non-commercial semi-state sector, and open to all employees, be that full-time, part-time, hourly rate, and there was no age restriction on the TWSS either. So as long as the employer and the employee meet the eligibility criteria as outlined. The business must also have been experiencing that significant negative economic disruption due to the COVID-19 pandemic, and the employer must have been able to demonstrate that a minimum of 25% turnover or reduction in customer orders around that Q2 period of 2020. And again, the employers were best placed to determine that reduction or base it on a decline in customer orders or any other reasonable basis that they saw fit that this pandemic was affecting their business. And obviously some cases are more obvious than others. We had a lot of businesses closing during that period, so that would be quite obvious that they have suffered significantly from the pandemic. Other cases may not be so obvious, and they may need to have been looked further for that specific reduction or impact. But now, as we have moved beyond that Q2 period and trade is recommencing, it is important that employers continue to monitor the eligibility, and that key benchmark is still that Q2 turnover, and that the business has suffered at least that 25% reduction in turnover of customer orders. But again, as businesses have started to improve, or hopefully that's the case in most scenarios, that the wage subsidy amounts should start to taper off where the employers have been able to start paying normal or near normal wage or payroll outputs. All employers who have implemented the scheme should retain evidence and supporting documents for any future compliance or assurance checks. And again, I'll talk to you about those compliance checks a little bit later, but examples of those documents are outlined in the above mentioned eligibility criteria document. Now, apologies, my slide just jumped on there. So an eligible employee under the TWSS was somebody who their employer could not afford to pay. Sorry, the slides have just gone crazy on me here. Just going back.
Actually, sorry, Karen, it's Helen here.
Right. Yeah,
actually, we just draw your sound dropped a wee second there from whenever you were talking.
Okay.
No, you're grand. It's just from whenever you were talking about that employers were able to pay more in the kind of subsidy. So just, yeah, with that slide you're on now.
Okay, yep, sure. So it's just back on the eligibility of the employer there. So where we're finding that as we moved into the Q2 period, hopefully it's the case that business is starting to improve and employers have more affordability in making those normal wage or payroll outputs, and any subsidy payments will start to taper off as the employers are able to, as I said, meet those normal wage or payroll outputs. So the eligible employee then for the purpose of the TWSS was an employee who their employer could not afford to fully pay them because of the crisis. And that employee must have been on the employer's payroll at the 29th of February 2020, with the pay and tax details being reported to revenue in qualifying payroll submissions, and that they're being kept, or they were being kept, on the employer's payroll. When I say qualifying payroll submissions, they are detailed. The specific criteria for those qualifying submissions are detailed in our employer FAQ guidance document up on the website, and they set out the specific dates where payroll submissions must have been made to revenue. If an employee had been laid off and has subsequently been rehired after the 29th of February, if those employees were on the payroll at the end of February and are included in those February submissions, then they too are also eligible for the temporary wage subsidy. So as promised, I'll talk you through some of the operational aspects of the TWSS and those recent announcements that were made in the course of June or July around the maternity, paternity, adoptive leave or unpaid leave, the apprentices announcement, which I know is not overly relevant to the members here today, but just to make you aware of that announcement that was made. And then I'll move into that Employment Wage Subsidy Scheme, so the EWSS, that will be coming at us now in the coming weeks. A little bit about the rehiring of employees, compliance checks, the week one basis, the end of year review for employees, and that reconciliation phase, again, that's coming in terms of the TWSS, and how an employer can stop operating the TWSS scheme. So just very briefly on these two slides, the maternity, adoptive, paternity or related unpaid leave, or employees who were in receipt of certain DSP benefits, including health and safety benefit or illness benefit. And that's a mouthful in itself to say. So this change was announced again by the Minister, and it was for those employees who had returned to work after a period of any of those aforementioned leaves, or had received any of those benefits. And during that period of leave, they may have been either paid by their employer, which could have comprised a level of benefit. They may have only been in receipt of DSP benefit directly from the DSP, or they may have received neither benefit nor pay from their employer. And in those last two scenarios, those employees would not have been included on the January-February payroll 2020 periods, which of course, as we know by now, was the basis for calculating the average revenue net weekly pay for employees on the temporary wage subsidy scheme. So these specific employees would not have been included in those scenarios. And even in cases where their employer had paid them or had them on their payroll, it's possible that that average revenue net weekly pay was suppressed because their pay in those months might have been reduced to take account of those benefits. So as a result, the subsidy available to those certain employees might not have been optimized. So this change was brought in, and it just involved the employer notifying revenue through the Ross My Inquiries facility. And the revenue caseworkers would pick up those details, would calculate the revenue net weekly pay for those particular employees, and generate an employer CSV file and send it up or notify the employer that a new CSV file was available for them to download. So I suppose in terms of this session, if there are still employers operating the TWSS and find that they haven't submitted details in relation to these type of employees, please do that now, because as we know, the scheme is due to end from the 31st of August. So again, similar occurrence for the apprentices, and as I said, I know it's not really relevant, but again, it was just a change that was announced by the Minister, and I suppose it just shows how this scheme has evolved since March, I suppose, in those few months, all these announcements that came forward and the developments that were undertaken to include all of these types of scenarios. So again, we had situations where apprentices may have been on an apprenticeship education training program during that February 2020 period, and for those apprentices the scheme was applied retrospectively to either the date to return of employment, the date the employer joined the scheme, or the 26th of March, whichever is the latest. And for any employees that were in receipt of the pandemic unemployment payment, no retrospection applied in those cases, and those rules or criteria also relate to the maternity, paternity, adoptive cases I mentioned previously. Excuse me. So, however, if they were in receipt and no retrospection applied, the employer could rehire these apprentices and continue operating the temporary wage subsidy to subsidise their pay. So the July stimulus announcement, and I know this slide looks a little bit stark, but there is a level of detail behind it. So as I mentioned, the TWSS itself will expire on the 31st of August. And since the 31st of July, as I said, no new employer can join the TWSS, but the current employers will still be able to continue with the temporary wage subsidy until that time. The Employment Wage Subsidy, so the EWSS, was announced by government on the 23rd of July, and that is an economy-wide enterprise support that focuses primarily on the business eligibility to give a flat rate subsidy to qualifying employers on the basis of the numbers paid and eligible employees on their payroll. This EWSS will replace the temporary wage subsidy, so TWSS, from the 1st of September and continue until the 31st of March 2021. However, both schemes will run in parallel from the 1st of July 2020 until the TWSS ceases at the end of August. And that basically signifies that there is an element of backdating for those non-TWSS employees from the 1st of July. The legislation, as I was made aware, has been signed by the President on the 1st of August, but we are currently developing guidance material which will set out in more detail that eligibility criteria and the operating procedures behind this new EWSS scheme. So they will be published as soon as we have them ready and as they're made available. The new scheme will not affect any legal obligations that the employer may have to their employee as regards those terms, conditions or entitlement on their employment, and the subsidy itself will be paid directly into the designated bank account of the employer as soon as is practicable after the return filing date, so normally the 15th of the following month. Employers who are not eligible for the TWSS or who had employees that were not eligible for the TWSS can claim that EWSS in respect of these employees, as I said, from the 1st of July. And that will be dealt with through like a sweepback mechanism, which is currently under development, with the proposal for payments from that sweepback being made in the September period. To qualify for this scheme, the employer must be able to demonstrate that the business will experience a 30% reduction in turnover or orders between the 1st of July and the 31st of December, and that the disruption has been caused by the COVID-19 pandemic. The reduction in turnover or customer orders, as could be the case, is relevant to the same period in 2019 where the business was in existence prior to the 1st of July 2019, the date of commencement to 31st of December 2019, or where a business commenced after the 1st of November 2019. It's based on the projected turnover or orders. So also as an employer, you'll be required to undertake a review on the last day of every month to ensure that you continue to meet that eligibility criteria. And if you find you no longer qualify, then you should simply deregister for EWSS with effect from the following day, so that being the 1st of the month. And if you find that your circumstances change again and you become eligible again, you can certainly re-register and claim from that date of registration. But unfortunately, it is not possible to backdate the claim to include that period of deregistration, as that correctly reflects the expectation in that particular month. The reduced rate of the employer's PRSI of 0.5% will continue, and it's applicable to the employees, and certain categories of employees are excluded, and safeguards will be included to minimise abuse of the scheme. Again, it will follow that administration under the self-assessment basis, and the employers will be required to deduct and remit income tax, USC and employee PRSI on all payments under the EWSS. As I said, we're currently developing that guidance material, so as soon as we have it available, it will be published and circulated. And we're also developing that registration facility for the EWSS scheme, and we hope to have that operational by mid-August. And again, as with the TWSS and in line with international practice, a list of the employers that are availing of the EWSS will be published in January 2021 and April 2021 on revenue.ie. The final line there, the seasonal workers and rehires. Eligible employers can backdate a claim to the 1st of July for the EWSS payments in respect of new hires and seasonal workers, subject to limited expectations. Payments in respect of the July and August are expected to be made again in mid-September, with payments for subsequent periods being made monthly in arrears after that date. The expected rates of payment on the EWSS subsidy, it's based on the employee gross weekly wage. So where that weekly wage is less than 150 per week, the subsidy is nil. If it's from 150 to 202.99, the subsidy is 150. Where the weekly gross wage is from €203 to €1462, the subsidy is €203, and where the weekly wage is more than 1462, the subsidy is nil. So I hope that gives you a bit of an insight into the scheme that's coming. So I'll move on. The slide seems to have, there we go. So rehiring of eligible employees, and this is in respect of the TWSS. So we're back on the TWSS for now. So again, where as a result of the COVID crisis, an employee was temporarily laid off or their employment was ceased, and the employer wished to place them back on the payroll and avail of the subsidy and continue this until the 31st of August, the employer can create a new employment with the same PPSN, but with a new employment ID and apply the scheme for that employee. And we've had a lot of queries around this, and there's some issues when employers rehire employees with that new ID. There's certain issues around whether it's an active ID or an eligible ID. So we have set out a step-by-step process in the FAQ guidance document. We're on version 17 of that, published to the website. And again, it will answer certain scenarios if you're finding any errors or issues that are coming back once you make those payroll submissions. And that process is set out in there. We do advise for pay frequencies that are other than weekly, that the employer consider placing those rehires back on the weekly pay frequency, and it's just to simplify the alignment with the temporary wage subsidy payment, but to prevent that the PUP payment overlap where an employee may have been in receipt of the payment from DASP. So it'll prevent an overpayment situation for the employee, just to align them on a weekly basis. The CSV file for these employees, for rehired employees, is refreshed daily and includes the employee information for those specific rehired employees, but the notification must be made to Revenue, excuse me, the day before the employer is calculating and submitting that first payroll information for the rehired employees to Revenue. If there are any other issues, if people are rehiring now over the course of the next couple of weeks to the end of August, if there are other issues other than what's set out in that step-by-step process, please do contact the National Employer Helpline to have that subsidy amount allocated to the correct or active employment. We have seen it where there could be multiple employments or such on the system. So if the employer is finding that they can't resolve those issues, then please do contact the National Employer Helpline to have it rectified for you. So moving on into compliance checks then. So to ensure that the temporary wage subsidy was operating correctly, Revenue launched or is conducting this programme of compliance checks on all employers who have availed of the scheme at any stage, not just those that are currently availing of it. And it basically consists of letters issuing out to employers or their agents via that My Inquiries inbox. So be sure, if you are operating the temporary wage subsidy, to keep an eye on that inbox for those letters. We are working in batches, or the compliance team are working in batches, so you may not have received a notice yet, but just do watch that inbox, because it is essential that the employers respond promptly to those letters, as failure to reply might lead to suspension of any future payments. And it's not to say that, I mean, there's normally a 5-day turnaround, I think, on most of the letters. If you find that's too short a period, please just do contact. The importance is that you make contact with the caseworker, let them know you've received the letter and that you are gathering that information. Just don't ignore the letter if it comes in. But they're basically just to confirm that the employer has met the eligibility criteria. So, for example, details of the business activity, the negative impact that was suffered. If the business was closed, you'll be asked to provide the date of closure or the date of disruption to the business. You may also be asked to prove your basis for that eligibility or that turnover test. And you will also be asked some of those subsidy amounts that were paid, and possibly a sample of pay slips for your employees, just to verify that, to support any kind of information or calculations that were made. It's important to note that this compliance check is not part of an audit or intervention. The contact is merely just a request for information to provide assurance, again, that the scheme has been operated correctly or as intended by the employers. But as I said, that information must be sent back, or do make contact with your caseworker if you find that you can't provide the information within the set time, because it may impact on any refunds that you're expecting in relation to subsidy payments. The compliance check programme will also address any identified issues in respect of the real-time PAYE PMOD, is what we call it, by employers over the 2019 or 2020 period. And it'll also provide an opportunity for employers to address any other outstanding tax issues that they may have. And that will be important for employers who intend to avail of the debt warehousing arrangement for the employer PAYE and VAT liabilities that have possibly been incurred during the pandemic period. So we'll move on to the non-cumulative week 1 basis. So you're probably aware the TWSS payments are liable to income tax and USC, while the pandemic unemployment payment is liable to income tax. Now, although they're not being taxed in the real time and live environment through the PAYE system, they will be subject to taxation on an end of year review. So with the announcement of the continuation of the temporary wage subsidy scheme to the end of August, in order to minimise that amount of tax that could be owing or that may arise at the end of the year for the employee, Revenue placed all employees that received payments either under the temporary wage subsidy or the pandemic unemployment payment on a non-cumulative week 1 basis from the 21st of June. This year, and an updated revenue payroll notification was sent to all employers to notify them of this and to reflect that week 1 basis for all employees. Reverting to a cumulative basis for employees will need contact to Revenue, so you will need to contact Revenue if you wish to revert to the cumulative basis. However, it will only be in very exceptional circumstances, and in saying that, it will be, you may contact your Revenue and it will need to be escalated to a higher level of senior management to approve that cumulative basis following the period of temporary wage subsidy payments. The EWSS itself, if the employee was not previously on the temporary wage subsidy or in receipt of a PUP, then joining the EWSS, that employee will be taxed as normal. And I suppose the advantage for employees in these scenarios on a week one basis is that they will be taxed correctly each week or per month per payment on the TWSS, and they won't get that refund based on the unused credits and which may have been used because of the non-taxation in the live environment. So, and as I said, it's also to minimise that hardship at the end of the year for employees. So that kind of moves me into the end of year review for the employee. And as I said, that subsidy is not taxable in the live PAYE environment, but by way of end of year review. And when that review is carried out, it is normal practice that if a liability arises, that revenue will collect that tax owing in manageable amounts. And that's normally done by reducing the individual's tax credits for future year or years, again, in order to minimise any hardship that could be suffered by the employee. In this case, any reduction in credits won't begin until the 2022 tax year. And additionally then, if employees find that they have other expenses or other tax credits to claim, such as health expenses, they could also help to reduce any liability that may arise. So moving into how employers can stop operating the temporary wage subsidy scheme. So if the employer did not meet the eligibility criteria or find that they're no longer meeting the criteria and had reasonable grounds to assume that they would, then they just should immediately cease claiming the subsidy for the extended period of the scheme. And revenue will require evidence of those assumptions, as I said, during those compliance verification checks, for the basis of that reasonable projection, I suppose, of the eligibility criteria. If there was no reasonable basis, or they can find no reasonable basis, then the subsidy will be repayable. But for these employers, they should cease returning J9 payroll submissions, or the PRSI class J9 submissions, to revenue. But in doing that, they must ensure that the PRSI class on all its employees is returned to the correct PRSI class as was before the temporary wage subsidy, and used for all future payroll submissions. Going forward, once the scheme is ending on the 31st of August, we are working on the development as to, kind of try and find some sort of seamless integration. Now, the employers will have to register for EWSS, but to find that marker or distinction between a J9 payroll submission under TWSS and a distinction under EWSS, we're still working on that. It's still in development, and again, we will issue notice of that as to how that mechanism will work once we have it developed. But in the meantime, the employer should retain all records in relation to the operation of the scheme, including all those subsidy payments that were made to employees, any tax refunds that were received on behalf of the employees, and any refunds they received in relation to the subsidy payments. And that will all be reconciled, I suppose, during the reconciliation phase of the scheme, and will be included in the list of the participants published at the end of the scheme. So that moves me in nicely to the reconciliation phase. Now, again, this is under development. It's well under development at the moment. We have moved into a testing phase of the reconciliation of the TWSS. And for those that may not be aware as to why we need to carry out a reconciliation, very early on when the employer refund scheme was announced in March, for those 2 weeks, I think it was a period of 2 weeks in March, there were a flat refund made back to the employers. Then when we moved back into the transitional phase of the temporary wage subsidy scheme up to the 3rd of May, there was a flat rate paid to the employers per head of employee of €410, regardless of the subsidy payment made to employees. So at the time, we did ask employers to hold that excess amount of credit for future offset against temporary wage subsidy or for the reconciliation phase. And then I was removed into that operational period from the 4th of May. revenue were providing the subsidy amounts, or the maximum weekly wage amounts and the maximum weekly employer paid before tapering amounts to employers in relation to employees through that CSV file. So there is an element of kind of overpayment, of underpayment that might occur for employers who have been operating the scheme all along. And again, you know, when we're talking about the manual cases that occurred for the maternity, paternity, the apprenticeships, so there is an element of reconciliation needed. And again, this requires a development on our system from our side. So as I said, it is in testing phase. We will have definite guidance on that, and a tax and duty manual we're hoping to publish as well, and to train our own staff in this reconciliation period for any queries that may arise from employers. But as I said, retain all of that information, all of the records. It's proposed that a CSV file will be required, or an element of the reconciliation phase will be through a CSV file for those subsidy paid details, and it's again an upload download of those CSV files back to ourselves to reconcile any amounts. I should also mention that a new RevPay facility has been launched to make refunds of any temporary wage subsidy payments, and to no longer use the bank account details that were previously provided, or the EFT method that was previously advised. So if you are still making any refunds of temporary wage subsidy back to revenue, just ensure that you do it through the RevPay facility, and that amounts only include the temporary wage subsidy payments and not the income tax and USC. They should be separately paid under the PAYE EMP heading, to ensure that the payment is correctly reflected on the employer's PAYE EMP balance as such. And again, there are instructions set out on our website. There's a dedicated page at the moment under the COVID-19 banner where you'll find the temporary wage subsidy information. There's a fourth link there with instructions how to use that RevPay facility, and it's also within our FAQ guidance document. So I'll move on. We're coming to the final slides here. So just, I have mentioned that CSV file a number of times. If you're not familiar with it, it's like a data sheet or a spreadsheet for uploading and downloading information across various software platforms. A lot of the payroll software providers would be familiar with these files and have built developments into their own software. So there may just be one or two levels of information that need to be imported into those documents when using the CSV file. But as I said, from the 4th of May, Revenue were providing that information regarding the TWSS payments to employees in that CSV file to employers. So they would have been uploading and downloading by now. And the importance of using that revenue file is that the employer, if they do not use that CSV file information, they're at risk of miscalculating the subsidy payments, and they would not receive the expected refund back from revenue, because that CSV file contains the information from our own revenue system in calculating that average revenue net weekly pay amount from the January and February payroll submissions. If the employer is not using that information, again, they're at risk of operating outside of the guidance of the scheme, or as the published revenue guidance. And as I said, they won't receive that expected refund as calculated by ourselves. So that brings me to the end of the presentation. I hope it's useful. I know the expectation of the EWSS versus the TWSS, but as I said at the beginning, it is important to keep reminding employers we are still operating the TWSS, and it will continue on past the 31st of August for that reconciliation period and the end of year review. So it is important to keep reminding employers of those operational aspects. And as we move closer towards the end of August, we will continue with the EWSS publication of material, publication of guidance. So I hope you found it useful. That's just a list on that final slide there of our FAQs and guidance that have been published. They're all available on our website. That eligibility and proofs document that I made reference to, if you are receiving notification of any of those compliance checks, have a look there for some of the supporting documents that, I mean, it should be gathered as you have been working through the temporary wage subsidy scheme anyway. You know, just keep those, retain those evidence and supporting materials. And we also published an employee guidance, which is aligned with the employer guidance document, but it's just a simplified version for any employees who have been receiving temporary wage subsidy payments, and that is available on the website too. So thank you very much for your attention. I will pass you back over now. I think we're going to switch on the cameras.
That's great. Thanks a million, Karen. Brilliant. You're a mine of information. So needless to say, we have quite a few questions. So look, I'll do it like kind of like a rapid fire round. So we'll see if you pick them up. So so on the EWSS, so the assessment now must be done monthly, quarter, or not quarterly, or the full year in terms of the 30%. Is that correct?
In terms of the, sorry, for the EWSS, the reduction in turnover 30%?
Yeah.
Is for the period of 1 July to 31st December 2020. And it will be based in comparison to that same period 2019. However, there will be a requirement to declare each month, at the end of each month, that they are still eligible or meeting that eligibility criteria of a reduction of 30%.
Okay, so then it will, so then that it is monthly really that they have to do it. And I guess there's another question here then, how is that turnover determined? Is it based on cash receipts per VAT3 or adjusted for WIP?
It's very similar to what we had for the TWSS. It's a different period of time in respects of turnover and customer orders. And in the TWSS, you'll probably find there was quite a substantial amount of information given on the eligibility criteria as to how you could figure the 25% over Q1 that we used in the temporary wage subsidy. And a lot of that is the same criteria that we're using in respect of the employer wage subsidy. So so while we're scripting up the details of that, a good guide for people to look at would be the temporary wage subsidy eligibility criteria that's on our website.
Okay, great. Now, will the EWSS be reflected on payslip similar to the TWSS?
This is a completely fundamental change in the subsidy. The TWSS was a subsidy for employers to pay employees, and the government subsidy, the government in that one asked for the subsidy to be reflected on the employee's payslip. In this case, the employee will be paid as normal with normal taxation and normal PRSI classes, and it's the employer who's getting the subsidy. Okay. So it doesn't need to be reflected on the wage subsidy, on the wage scheme. Come in, Anne, anytime.
Okay, let me see if there's a question here that's not EWSS. Okay, we have a person due to return following maternity leave at the end of September. Must we advise ROS through inquiries, or can they go straight on to the new scheme when they return through payroll? Oh, that's probably not for you.
Well, the maternity was always a problematic area for us originally, and we found a solution which brought us into the for the temporary wage subsidy scheme. In respect of the employer wage subsidy scheme, it's no longer a problem. That person would be treated as if there was no subsidy scheme, and it's the so they treat them as normal. So the same criteria as normal non-subsidy arrangements would still apply between the employer and the employee, and the subsidy would be payable if that's an eligible employee in that regard from September onwards. Bearing in mind, we still have to do a little bit of work as to what is the relationship between that person on maternity leave, if they were getting, if they're off pay or they're being partially paid while they're also getting DSAP maternity benefits. So there's a bit of work to be done on that on our side, just to provide clarification, I'm sure.
Okay. And I'm sorry, Gearóid, these are all EWSS questions, so I'm not sure if you have we got Anne back yet? You are
good.
right. Okay.
Yes.
Gearóid was sweating there. Okay. So where is it? Sorry. Okay, so are the tiers are now based on gross weekly wage now, not based on the, sorry, are the tiers for the gross weekly wage based on their current gross weekly wage or their previous weekly wage, or does that flex per month? Because obviously a lot of businesses now are going into seasonal, so their wages could adjust quite a lot week on week.
Yes, so it's based on the weekly wage in the week that you're claiming the subsidy. So in 1 week, you might be entitled to no subsidy in respect of an employee if you pay them less than 151, but there might be another week where you're paying them €205, so you're entitled to a subsidy in that week of €203. So it's,
okay.
The subsidy is determined by the wage that you pay in the relevant pay period.
Okay. Can employees be rehired for 2 to 3 days work and claim welfare for unworked days while the employer claims EWSS from September? That might be.
Can I come in on that one, Anne? Yeah, this is an area that we need to work out with DSAP because people are looking at shorter term working schemes and how that would work. So that relationship needs still to be factored into our calculations.
Okay. Here's an actual TWSS question for you, Gearóid. If an excess payment has been received on the TWSS, should we contact revenue using my inquiries or wait for the reconciliation process at end of year?
You can actually do both. We probably won't do anything until the reconciliation, but if people have any issues, it's no harm just to contact us through my inquiries to let us know that they've noted this problem, and we'll work through it when we come to the reconciliation aspects of it.
Okay. I think Karen might have answered this in her presentation, but just in case I misheard it, is there a different tax code for TWSS and EWSS, or are they all processed as J9?
That will be confirmed in the guidelines when they come out. It won't be J9, but the actual instructions on what PRSI class to use will be set out in the guidelines when they're published, hopefully at some stage in the next week or two.
Okay, and I think this is to do with the legislation, so you probably don't have the detail on this one yet. Just can you address the proprietary directors in the Q&A, please? And I know the government made a change on that at the weekend, but I don't believe there's any more detail on that as yet, is there?
That's correct. We're still working out how that will operate based on the government statement.
Okay. Sorry, now I know we're at 50 minutes here, but we have quite a few questions. So if anybody needs to log off, we are recording this, we'll send it on, but I'll just try and kind of clear a few more questions that we have it. Just for clarification, the EWSS is based on gross pay, not net pay, like TWSS.
That's correct. It's gross weekly wage, yes.
Okay.
Now that includes notional pay, and it's before deduction for things like pension and salary sacrifice.
Okay. Will EWSS be taxable same as TWSS at end of year on P21s?
No, with EWSS, yeah, you'll see a return to normal taxation of all wages that are paid to the employees. It'll be different to TWSS because the subsidy is going to the employer, it's not going to the employee. So the employee will revert to being taxed as normal.
Okay. I'm not sure if there's enough information on this one. Would an employer be backdated for a person back from illness on TWSS? That's probably too detailed for that individual, but Gearóid, you might be able to give a steer there.
We expanded the scheme, or we opened the scheme through a manual processing within revenue to allow for people returning from illness benefit and maternity benefit, adoptive leave. There was a long list of DSAP payments that we brought into the scheme, and we're still working out how best to back pay if it is possible to refund for people retrospectively to when they started while they were on illness benefit. So there's a little bit more work to be done on that, and getting our own capacity to do that now will probably be during the reconciliation period. We'll be doing something like that, but it's not as easy as just pushing the money. There's issues behind that as well.
Okay. Can I ask, is this for companies only, or will there be any information for self-employed?
Employment Wage Subsidy Scheme will be for sole traders and for corporate. But obviously, because a sole trader can't employ themselves, they won't be able to claim a subsidy in respect of themselves.
Okay. If in 1 month you're not meeting the 30% reduction criteria, but you know on the whole of 6 months that you will, can you stay in the scheme after the month in question? I think Karen said that you deregister for a month, you're less than 30% down, and then you re-register again. Is that correct?
No, you look at it in the round, so you look at the whole 6 months. So you don't look at it month by month, you look at the whole 6 months and you compare your expectation for the 6 months of July to December 2020 with what happened in July to December 2019. You're just asked to do the review every month because in July or August you might have expected that turnover wouldn't be as high as what you see it is now likely to be, and that's why you're expected to do the review month by month, but it is the 6 monthly review you'll be continually doing.
Okay. Once eligibility is established and registration is completed, can the EWSS be claimed retrospectively for new hires in July, or for any previous new hires prior to July that did not qualify for the TWSS?
The sweetback Karen spoke about is in respect of new hires so you can claim in respect of them for July and August if the eligibility criteria is met. That will be done through sweetback. It won't be done. We'll be providing details on how that will operate afterwards. You can't backdate before July because it's a concession to even go back to the 1st of July. You won't be able to do anything before that.
Okay. And this,
now, having said that, sorry, Helen, I'll just confirm.
Okay,
if you took them on, if you took them on before July, you will be able to claim in respect of them from the 1st of July onwards.
Yeah. Okay.
But it's just that you can't claim in respect of them for wages you paid before the 1st of July.
Mm-hmm.
Okay. And then last one, we have one company and they're a slow startup business, excuse me, and they currently meet the eligibility criteria, but with the new criteria, because they're just starting up, they may not have that turnover comparison. How do they do if they don't have 2019 figures to compare against in terms of the 30%?
If you don't have 2019 figures, you're supposed to compare it with what your original projections would be if COVID hadn't impacted your business. So you look at what your projections would have been before COVID and what they are now based on the circumstances we find ourselves in.
Okay. Perfect. Look, I could probably go on for about another half an hour, but I'm conscious we're kind of coming up to the hour or so. Look, I think we'll call it there. Huge thanks to all the panel for your insights and to everybody else for tuning in. I mean, I hope you find it useful. As I said at the start, like we'll pull together an FAQ document because there is a lot more detail of this to come out that the guys are kind of working through. And then as people kind of work through these different schemes, this is where all of these nuances come up. But we will have that FAQ document. That'll probably take a while to kind of get all of those together, probably back end of next week. But we'll have that up on the support hub. We'll put the PDF of Karen's slides up on the support hub. And it's kind of like always a good idea to keep your eye on that side because we're always updating the information. And then we've recorded the session, the recording will go up there and you'll get an email probably on Monday morning or by Monday lunchtime with a link to the recording that you can actually kind of go through then. And I guess just a quick heads up on, we have some other events kind of coming up that are very much focusing on driving demand in September and beyond, because obviously we're trying to extend the season as much as possible. So there'll be 2 webinars in mid-August. The first one's on the 18th of August, and that's around kind of consumer insights, and that's Jill, our head of consumer planning, and that's the latest, that'll be the latest research we have coming in on consumer sentiment, behavior and intent, and really how that's changing as things have been changing over the last few weeks. Then on the 2 days later, on the 20th, we'll actually have 2 additional experts who will actually take those consumer insights and really help businesses then transform that information into kind of maybe how do you rethink and reposition your offer to attract to those businesses, as well as looking to optimize the revenue generation and spend. And then we'll also have our commercial development team. They're rolling out a suite of sales campaigns that are looking at collaborating with quite a number of strategic partners. And again, that's all about driving conversion. And they're looking to kind of drive probably over 10 million in terms of direct sales, and that's going to be rolled out in a number of platforms over the next few months. And you'll hear more information than that again in the next week or so of really kind of how to get involved in those and how to get behind it. So with that, as I say, thank you again to you all. That's it from us, and take care and mind yourself.